The RBA held rates. Can they afford to do that?
Look, I think so. There's really, in the Australian economy, there doesn't seem to be too many inflationary pressures at the moment. The economy is performing quite well overall, but there is quite a mixture of performances depending on what sector you look at. So certainly the mining sector is doing very, very well, but other sectors are finding it a bit tougher. Tourism, manufacturing, retail are all reporting softer conditions. So it's a mixture of economic conditions, and certainly I don't think any pressing need for the Reserve Bank to be moving interest rates right at this second.
But inflation is above target, oil prices are higher, you have this extremely tight labour market because of the mining boom. It must be very difficult to set rates for this economy, which is effectively two-speed. Is that correct?
Yeah, no, absolutely, and I think that two-speed characterisation is definitely true from what I've just said. Look, the Reserve Bank has got interest rates up quite quickly. It's faster than just about any other central bank in the world. So the degree of restraint that they've got for the economy, given the two-speed nature of it, I think is appropriate. It is difficult to look at that, but you mentioned that inflation's above target. In fact, we're about to get our next CPI quarterly reading later this month. That will show that the core reading is probably under 2%, so beginning to go below the longer term average target, but at the same time the headline rate will probably annualise around 5%, so we've even got two-speed inflation indications, I think, in this country.
Now, at the last meeting, we know that the RBA was considering the impact of the Queensland floods. We know at this meeting it was likely talking about the Japanese crisis. But if you look at both of these disasters, they could either be seen as deflationary or inflationary. Which one do you think they are?
Well, look, I think the interesting thing about this month's statement is it's almost identical to last month's statement. Huge sections of the press release are identical. There's only two very mild changes from last month's statement. I've never seen that before. It's the most identical monthly statement I've ever seen. They mentioned a little bit about the Japanese earthquake and tsunami, and they said that will affect Japanese growth, but they didn't see it as affecting broader Asian growth, which is much more important for the Australian economy. And then they had a statement that employment growth had moderated a little bit. They'd been expecting that, but they still saw when the leading indicators were going to suggest that employment growth kept growing. So I think when they look through all of these developments, supply side shocks typically reduce demand in the short term, push prices up a little bit, and then down the road they also add to demand with the reconstruction effort. The bank has said very clearly last month it'll look through these effects, the short term effects on inflation and growth, and be very focused on the medium term, which it has done for many, many years.
So Ivan, where down the road are we going to get a rate hike from the RBA?
Look, I still think in the second half of this year there'll be some pressure for higher rates. It seems to have been the market's been pushing that out. I think when you look at the activity data, you don't get a good strong signal at all for much of a rate increase. I think it will come from some slightly stronger employment growth and some pickup in some of the headline inflation measures, which I believe when commodities are running strongly, headline tends to lead core inflation. So that's what we'll be watching very closely, is some of the labour market indicators and the inflation indicators, and also wages. There's a bit more anecdotal evidence around that the resources sector, which is performing very strongly, is beginning to draw labour out of other sectors of the economy as well. So that's at least a few months away, I think, before we get towards that situation.
All right, Ivan Colhoun of ANZ, thanks very much for being with us.